Hello traders. So today what we're going to do is just have a look at the behavior of price at a level. So before we get started, just make sure to subscribe, like, dislike, or comment. It's kind of difficult engaging with an audience that you can't see people's faces. So comments always help to see if we're on the right track. Now, I did create a video some time ago about levels, and then there was another video that I created about price behavior. So in other words, price will trend, range, trend, channel, then range. So what I mean by that is trend, channel, and then range. Okay, so you often see this pattern. I think just watch. Good idea to watch those videos. I'll put links up to them in the video for you as well. So let's get started. Essentially, what I'm going to do here is we're looking at the DAX on the 4-hour, and this was back in November, early November, when it created its high. And you can see here how we had this trend, and then it went straight into a channel here, and then fell off. So we kind of missed the range perspective. Okay, but be that as it may, what I want to show you is behavior, and I think the behavior is where your patterns come in, so your reversal patterns. So for starters, there is a level, okay? Remember, I'm looking at this lowest pin bar in this area, which is this tail here on this bar. You can see it comes down to over here. So when we break below that, I expect price to come back and test it. Okay, now let's have a look at what price has done. And there is another level here, and the top of the cloud is another level. So we've got sort of two areas of support and resistance here. So let's just put a little line in along the cloud. So this is the cloud, okay? And you can see how price is using this level. You then have the 50 EMA as well, which is also behaving as a level. Okay? And then what you have is you've got this breakout at the top here. So for those of you that understand flat top triangles, you'll see that this is a flat top triangle, and there would have been people that would have been trying to push for this break, a continuation of this big move up. But there are a couple of keys that have happened. So we've broken through Kijunsen and Tekensen here, below them. Okay, and the other element here, just want to double check where we break through. Let's say from there, we're looking for 26 periods to see where Tekensen was. Okay, and at this point, the brown line Tekensen was below price as well. So that's a bearish signal. The fact that we've broken below Kijunsen and Tekensen like this is also a bearish signal. Okay, so the bulls would have been trying to push this up, and the bears, you can almost see that the bears have got the upper hand at this point. Now, the important thing is when we get to level, this is typically what happens. We have a lot of up and down at the level, attempting to break back up or break back below a level, and then eventually one of them fails. And this is where you look for your breakouts. Okay, so you can see here, this bar here broke a triangle to the downside, which gives you the indication that we are pointing to the downside. You can see Tekensen pointing down, and you see Kijunsen. So Kijunsen's red line, Tekensen's the blue line. You can both pointing to the downside. So there's a good possibility of the price continuing to the next level. Where is the next level? Bottom of the cloud. Okay, so let's just put that in. So there's the next level at the bottom of the cloud. See how we broke through, and we came back to attempt to break through. And this time it was just a single pullback before we pulled away. Now, just delete that segment, put a line in here. I want you to look to the left here, and see what price did there. The price was bouncing around on this level, trying to break back down. Was this a level? I doubt it was a level further back because we were quite high up. But no, that was just really, that was a level that was created from this move up, and it consolidated, and then broke up the continuation of the move. That will always come back to be retested in the future, which is what happened here, although it was pretty quick. Let's just delete everything because it's going to get messy if we don't. Okay, so here is another level here. Now, here is a very important thing. So this level here has been touched a number of times, but you can see how far we break past this level. And this is just to show you that the levels are not an exact science. Okay, it's kind of a general rule of thumb that at that point people are trying to buy or sell. So obviously some of the people that are trading are going to be trying to break that level, which will often push it down. You can see how we've gone past it. I think the furthest part was 100 points. So it can be pretty volatile. You can see how volatile this level is, because what is happening here is bears are trying to push through. Now, they've had enough of the move that's been running up for most of last year, and they're trying to push it back down. Okay, and the buyers are stepping in because they're trading with the trend, so they keep buying, trade with the trend. And now what you can see is how price action is behaving at this major level, and this is a major level. I mean, if you look back here, 1, 2, 3, 4 touches on this level, and anything more than 3 touches gives you a pretty good solid level. And we start to keep bouncing off this level. Okay, and you'll see we start forming a level right there where we broke through, and now price action is ranging. You can see it's ranging. Everything about it is telling you it's a range. So your 200 moving average, the purple line, is just sitting in the middle and it's flat. We are ranging. You're in the cloud. You're in the cloud here. Higginson is just bouncing around inside price here. No direction down or up, just bouncing up and down, up and down. When price does this, it actually becomes pretty simple to trade, because you're looking for longs in this area and you're looking for shorts at the top. And you can see how many times. I mean, that retest short, you would have been looking at this pin bar to take profit, and probably getting long. You get a double bottom here, long again. Where you're going to, you're below the cloud, so the level here, you'll see how price consolidates here before moving down. So when you're in big ranges like this, it becomes easy to put in a trade, to take a trade there for a short, and a stop loss above, about this high here. And your target is going to be anything in this area. So your first target will be the Brooks gap. Let's just mark it. So this top of this pin bar here is the Brooks gap. Okay, and your second target would be the pin bar itself, which does get hit eventually down here. But that's your first target. And so it becomes very easy if you can just anticipate what's happening inside these ranges. Now, remember, I always talk about the 50% of the range. So if I just put this on here, and you'll see, just put a line in here, that's the 50% of the range. Just delete the Fibonacci. In other words, this is the exact middle. Excuse me. Exact middle between the top of the range and the bottom of the range. And can you see what price action does here? You can see how we are trying to break to the top through the middle, failed, came back to the bottom. And you can see here how we consolidate around the 61.8, move to the downside, which would have been here. Okay? And don't believe me, let's put the Fibonacci back on, and you'll see. Okay, put it the other way around. there to there. Okay, 61.8, there it is, and that's where we sit. Okay, so Fibonacci is a level, and you can see here at the top of this cloud is also a level. And you can see how price consolidates at the level for either a push down or a break up. So the minute you start seeing this, you know something's going to happen. It's either going to break to the upside or break to the downside. So the point is taking a guess at it, rather trade on the break. So if you put in a short here with a stop up there, or you put in a long here and you put a stop over here. So you're just going to break, you're going to trade the break off this mini range. Okay, so let's get to so you can see this major level is here, but then we still do have a couple of mini levels. So there's one, which is the bottom of this tail, okay, and then we have another one there. So again, look what happens to price when we get to this level. We consolidate. Only 2 bars on the 4 hour, but I mean that is a consolidation. And we break to the upside before coming back to the downside. And then we do a V reversal off the bottom. Now, what is a V reversal? Your price heads down to a level and then immediately reverses violently to the upside. These patterns are rare and it doesn't always happen. You can see over here is a V reversal. So often they're difficult to anticipate, and the only way that you actually can get in on them is to trade the level. Because what you can do is wait for confirmation, which would be the first green bar over there. And you can see here you had this big red bar down, then you had an inside bar with a pin bar. So you could very well have taken the trade at that point. And with this one here, you could have taken it up there or anticipated on, for example, on the hour to see whether there was a level that it was bouncing off. Okay. Yes. Okay. Let's just get. Okay, you have to bear with me now. I don't want to delete the channel because it's going to be very important soon. So there is the level. Okay. So you can see how price tried to break to the downside here, broke through, broke to the upside. Okay, so you can see how it consolidates at the level. And it's consolidating on top of the level, consolidating below the level. Now if we look where price is here, look what's happening. So you see this kind of price action at a level. Okay, you can see that it's consolidating and you're looking for a break either way. And within here, you'll see there is a range bar. So this bar in the middle here is the range bar. So again, when I see that kind of price action at a major level, and you can see how it is underneath the 50% of this range, probability is we're coming to the downside. And if I just hide that, then we'll have to take off the range bar. So you can see now, if you were watching this in real time, there's a lot of barbed wire. In other words, tails to the top and tails to the bottom. So it's kind of confusing as to what direction it's going. So first thing you want to do is look to the left. What is here at the left? Is there a level? So is there a flat bit of cloud? Is there a level where prices bounced around? Okay, and you can see there is a level, and it's 1, 2, 3, 4 touches on this level. So it's a pretty solid level. So the probability is we're going to bounce to the downside. Okay, so when I say probability, you've got a higher probability of it. There's no guarantee, but there's a higher probability of it going to the downside. So you could put in a short. You could have put a short in at this level and run it with a 30-point stop loss or a 50-point stop loss. So keep the stop loss tight because you're anticipating a move down. And often what happens is it will move down, and sometimes it'll just move to a previous level that it broke, which could have been there. And let's rather just use a line to show you. So there is the level, right? So that is the previous high, that tail. And we gapped up over it, okay? And now price is coming back to test this. You can see how it's bouncing off there, bouncing off there. Keeps bouncing, trying to push itself higher off this level, okay? But there's a bigger level at the top, so this level has one touch. Okay, there's no real, maybe there you've got another touch there, but it's not as strong as this level here. So this is the one that you'd be aiming for. Okay, but you can see how the bulls are using this to push price, to try and push it up to break this level. And there could be people with strategies that are buying here and selling here. Okay. So again, let's get whatever line is in there. Let's get that previous high in. So this line that I've just drawn now was the previous high. So what's happened is we've created a new high. And apart from the Dow, often when this happens, price immediately starts consolidating for a move to the downside, because it's created this high and it moves to the downside. Last year the Dow just kept doing it and continued moving up from a high, creating multiple new highs in a day. That's the Dow, it's not the norm. And what you see here is consolidation again. But what you want to look for in consolidation is what pattern is playing out. And it'll be a wedge or a triangle or a double top or a double bottom or a channel break, something like that. But essentially all it is price consolidating at a level. So you need to understand that the breakouts that you see when you start looking for falling wedges or rising wedges or double bottoms or Bollinger W reversals or M reversals, all they really are is price that is consolidating at a level for a change in direction. Okay, so don't get too hung up on looking for triangles and wedges and things like that, because often you'll miss it. And if it's blatantly staring at you, then everybody else can see it as well. So there's no real guarantee of what's going to play out. But rather look at it as it's consolidating. Yes, it's consolidating in a triangle, and we are at a previous high. So a break, in actual fact, the way you should do it is just say it's not a triangle, but it is a range. And there's my range. So a break below that range is when I get in. Okay, so, and you can see how price comes back to this level. This is the previous level here. And look what happens. Price consolidates. Here's the next level. And we broke through. We came back to test it. Okay, and you can see here's the next level that we had drawn in. And look how price behaves here. And now you've got another level that comes into play, which is the 200 EMA. You can see how it's trying to break back up through it, and it's failing, and it's being contained by this level here. But the longer this goes on, the more probability is that we're going to move to the downside. When we break a 200 EMA, it's often a pretty violent move to the downside before we come back to test it. Okay, and you can see how we had that major sell-off. And now, even with the volatility, you can see within here, every tail is essentially a level. Okay, every tail tells a story. So I just put this tail here, let's just mark it, and look what happens. Look at this level. Okay, so here you can see another consolidation, and this is often, we look at it and we say it's a wedge, or this one's a megaphone formation. So in other words, it's the endpoints here are not coming together. A wedge would be something like this. Okay, and this is the opposite, so it's a megaphone. The same principle, it's price consolidating. And then in a wedge, price is consolidating. And it's consolidating at a level. If I put a line there and we move, copy, and we put that line in there and then look to the left, look what's here. There's a previous low. Okay, and I think if we go really far back, we'll probably find, yeah, there you go, another level. And I don't have enough data loaded, but if you have more, you'll see that there will be somewhere in the past, there will be a price action that's consolidating at this level. And you can see how price is now building a base, okay, for move to the upside. Now, this happens on every time frame. Okay, but every time frame you have exactly the same scenario. Okay, we're talking about the weekly here. There's a previous high. Okay, to coincide with that, look what price does. It consolidates before it breaks the upside and moves. Then it consolidates over there, and there's the level that's consolidating on top of it. So there's the level, broken. It's trying to come back below the level. It manages over here, and then it goes to the upside. So have a look at what is happening with the DAX now. We have come to an area of consolidation, and this is a massive consolidation. So what, is this a pattern of sorts? And this is a great example of why I say don't look for your wedges and specifically wedges and head and shoulders and things like that. Don't rely on them 100%, because all it really is consolidation. And there are so many ways that you can interpret this consolidation. I mean, there's a channel, there's a flat bottom triangle. Okay, I could extend this line to here. And I could say that's kind of a pulling wedge thing in the bob. I could also just, do this, and then I could do that, say, well, that's the falling wedge. But there's many ways to interpret it. So what I'm getting at is rather look at what is happening. First look for the level, okay, and I'll delete. So first look for the level. There's a previous swing low, that's the level. We kind of broke it here, but we came back to the upside, okay? Where is the next major level? Next major level is up here, okay? We are in the cloud, and when we're in the cloud, it typically does consolidate or range. So what is happening here is we are ranging, okay? And it's as simple as that. We have a high there, and we have a low there, okay? So we are in a range, and we've been in a range for 2 months. This is now 2.5 months that we've been ranging. So when you're trading this, you know that coming up shortly around 12,600 will be the top of the range, and it's also Keynesian, which is a level. And what do you expect price to do at that level? So if I now drill down, let's just drill down to the 1 hour. Now you can see the weekly range that I've drawn in, we're in it. And where is the top of this range? It's here. So we are trending on the hour, we're trending to the upside. And you can see, wherever you see price consolidate, bet your bottom dollar there is a level. There'll be a level to the left. There'll be a level to the left. Okay. There's the top. There's the top. Okay. So what do you think is going to happen? So the probability here is we've come back to this level. See how we've come back to this level? Let me just mark. I don't want to delete this blue block, and we'll put that line in. That's the top of the blue block. Okay. So that's the top of the weekly range. So that is a target. It's a magnet of immense proportion, because when price gets there, bet your bottom dollar it will consolidate and more than likely pull to the bottom. It may be a shallow pullback before it pushes through and breaks out, but profit taking will happen here. Institutions are running massive contracts, so a fall of 20, 30 pips of millions of euros, they will take profit at that point. Okay, so again, you can see here, prices come to this level, consolidated, came back to this level, and it's busy consolidating now. So we expect a breakout of sorts, and this is the area that we're going to be targeting. Once we break this level, then we'll look for the next level. Okay, so again, just a sum, guys, here's a V reversal, have a look there. See inside bar, and then immediately bounces up. So often some traders will, when they see an inside bar, they will take the trade there, and they will keep their stop close there. And what I would like to look for is a level. Are we at a level? And there is a level there, and often there is a push through the level like that. Okay, and here you can see a consolidation which turned out to be a wedge. So there and there. Okay, so you can see how price consolidates in this area before it breaks out. Consolidates again on Dickinson using it as a level, breaks out, consolidates on the 200, see how it consolidates on the 200, then breaks out, consolidates at the level. So that's the basis. Hope it helps, and remember to like, subscribe, and leave me a comment, and catch you later.